Hello and welcome back to my 10 favorite people. Hope you're doing well. The hardest thing to do in this market is not predict what type of cycle Bitcoin is going to have or how low Bitcoin could go over the next few months and go all in with your cash at the absolute pico bottom. It's also not being able to predict exactly when the Fed is going to start cutting rates and what that change in monetary policy will do to Bitcoin and other risk assets. The hardest thing to do in this market and the most important skill that an investor can have is the ability to manage their emotions and fight the fear. And if you don't believe me, how is it that an asset like Bitcoin can go up exponentially over the past 15 years? And we have a stock index that has gone up exponentially over the past 100 years, yet the majority of market participants who trade those markets actively end up losing money instead of making it by holding in the long term. And of course, I know this is easier said than done. Mainstream media and the type of economic data we're receiving, and especially the type of data we're going to be seeing over the next few weeks and months really bring up those recession concerns. I mean, just today we got an update on job openings and the expectation was just under 8.4 million and it ended up coming in just above 8 million, a pretty big miss. And I know there's people that say we can't trust the data. The labor market data is cooked, the inflation data is cooked, but this is, even if I agree that it's not the most accurate representation, it's still the best thing we have to go off of. And if we look at job openings ever since early 2022, it's been going lower and lower and lower, and the likelihood of a recession just continues to increase. And managing one's emotions as this data gets worse is only going to become more difficult, which is why I always include these zoomed out charts in my video, because it's likely that the people that hold for the long term and don't try to sell the exact local top and buy back in at the recession bottom will make more money than those that try to actively trade week to week. And even though I don't actively change my positioning that often and my portfolio has essentially been the same for the entirety of 2024, the reason I'm always looking at potential cycle outcomes or how low Bitcoin can go is I like being prepared for multiple possibilities and not being blindsided by an outcome that I thought was impossible because I was convinced this was going to be a left translated cycle, or I was convinced this was going to be a normal cycle, or I told myself it's impossible we'll ever go below 50,000 again and I should just all in right here because prices are going to skyrocket. Even though my positioning is relatively bull oriented because I plan on holding these assets for the longer term, and I think money printing and national debt and what's being done by these central banks is only going to buoy asset prices over the next few years, holding through the volatility and the large drawdowns is the hard part that gets most people to make mistakes and get shaken out, which is why we always include these more zoomed out charts, but still follow the short-term data and prepare ourselves for potential catalysts that could have a large impact on price. And speaking of short-term catalysts, we're in this funny situation now where even though we're getting bad labor market data, the markets are actually going up on that news because it means the Fed doesn't have to keep rates as high for as long. And again, you guys know I don't like to jump to conclusions until we get the weekly close. It's great we're trading close to 71K right now. And if we do see a close anywhere near that level, it's likely we get continuation higher in the short term, but it's hard to ignore this weakening labor market data in the background. And I would not be surprised if we get a lot of volatility going into this unemployment rate print. And I really hope it comes in at 3.9%, because if it ends up coming in at 4%, I think it'll be very hard to play down the recession fears anymore. And I think it's going to become very apparent to everybody that we're in a stagflation environment where the economy and labor market are weakening while inflation stays elevated above the Fed's target. And that is not a good combination for risk assets in the short term. So we're going to try to weather that volatility and hang on and try and hold on to the positions we have for more of a long-term outlook, because I only expect these rate cut expectations to continue to fluctuate as we get more and more concerning economic data. And we know that rates have a big impact on Bitcoin. We bottomed when hikes got slowed down. We took off when the Fed paused. And if there does end up being the economic weakness required to make the Fed start cutting rates, I think we could see risk assets like the S&P 500 and Bitcoin react to that. And I can't believe we're a year and a half into this hiking cycle and there's still people saying that rate cuts are bearish. It's not the rate cuts themselves that are bearish. The Fed starts cutting rates when they see a looming recession. At least this is what we've seen the past 30 years. When the economic data gets bad enough, for example, if we were to see a spike in the unemployment rate, that would then force the Fed's hand to start rate cuts. But because they would start cutting those rates thanks to the looming recession, because that's the trend we saw in the last 3 cycles, the unemployment rate finds a bottom, it builds this base and then spikes, and that's what ends up leading to the recession, obviously, because the unemployment rate going up is a big part of recessions. Same thing in the dot-com cycle, same thing in the great financial crisis. The unemployment rate builds a base, and then once you get that spike, we are in a recession. And because the Fed can see that under the hood, they start cutting rates maybe 2 to 3 months before the recession actually hits to get ahead of it. And because just like the Fed, markets are forward looking as well, once it becomes very clear that a recession is 3 to 4 months out, I would expect risk assets like the S&P 500 to start undergoing some serious volatility. But then the money printing reaction as a result of that is what's going to send risk assets a lot higher once we actually bottom out and the Fed has to print money and lower rates to pull us back out of a recession. But regardless, there will be a lot of volatility along the way. And if you don't have your emotions in check, and if you don't fight the fear and focus on zooming out and looking at these long-term trends, it's very likely you're going to be buying at highs and selling at lows because of the fear that's going to ensue as this data continues to worsen and as we see more and more concerning headlines regarding this looming recession. For now, there's no complete red flags quite yet. Yes, the job openings going down slowly as a result of these elevated rates isn't great, but no red flags that's going to cause any market panic just yet. So that's why in the short term, Bitcoin can still continue higher. And as we said, a close above 70,000 on a weekly closing basis would be a nice hint that we're going to be going up in the short term. The S&P 500 still looks okay as well, holding above that crucial 50-250 region. We keep wicking under there, but then buyers keep stepping in, which is good to see. And of course, I do think one of the big deciding factors of our next trend will be this unemployment rate print on Friday, or maybe even the ADP employment number tomorrow. But for now, the S&P 500 still looks okay, and we still have hope that we might be following election year seasonality when you have a strong Q1. We've been following that so far. This is the first month where generally the uptrends begin in June, so we'll see if that actually plays out. As for the other assets in the portfolio, Ethereum still isn't really doing much, mostly consolidating. I wouldn't be surprised if it spent more time cooling off depending on when we get that ETF launch and then maybe rally higher into the launch of those spot ETFs, but we still don't have a launch date, so I'm not surprised that it's just continuing to chop around for now. Solana is kind of going sideways still, and you could argue maybe this is a bull flag, but it's still too early to know. We had a very nice bounce off those low 120 levels, got sold off pretty aggressively once we retested this previous consolidation, and right now it's just hugging the 618 Fibonacci retracement of the entirety of the bull market. So really too early to say. And of course, it's going to be very likely that Solana just follows whatever Bitcoin does, and Bitcoin is going up for now, but it's still quite early into the week and there's still a lot that can happen between now and Sunday. But for now, Solana looks relatively decent and nothing that serious to worry about. As for our alt season indicator, Bitcoin dominance still looks like it wants to go higher. Again, a big drop below 54% would be a great sign that it's time to go risk on, and maybe this left translated cycle is going to happen after all, and maybe it's time to buy some altcoins. But as long as Bitcoin dominance looks bullish, in my opinion, safer blue chip assets are the way to go, which is why my positioning still hasn't changed for now. And again, the same way I started this video, the most important skill in this market is being able to zoom out. And whenever you feel tempted to make any emotional decisions and pile into the market because it's going up, or sell everything because, there's a bad red day and everybody is panicking on social media and mainstream media outlets, zooming out is what I've found the best way to manage those emotions since I joined this market in late 2017. And I know, what an amazing time to join. That was actually the first time I heard about Bitcoin, but I didn't have that much money to invest at the time anyway. So yes, I ended up buying very close to the top, but because it was such little money, I was able to DCA throughout the bear market and just held on for dear life through the following cycle, even though there was so much fear and uncertainty almost every step of the way until late 2020, when everybody was massively bullish and piling in. And no matter what Bitcoin ends up doing this cycle, I think we're going to have a lot of volatility that shakes people out left and right as we enter this recession. And I think the hardest thing to do will be managing those emotions and staying patient and zooming out and focusing on these long-term trends as a result of currency devaluation and national debt increases. And that's a trend that we don't see stopping anytime soon. So we'll see what happens. We'll definitely document it throughout this week, but just remember that the hardest thing to do in this market is fighting the fear, and sometimes doing nothing is the best thing you can do to manage those emotions. But anyway, let me know if there's anything I missed. Is there a skill in this market more important than fighting fear? Would love to know what you guys think. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.